And welcome to the Aaron Katzman Show. I'm your host, Aaron Katzman. We speak about your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon-to-be financial capital of the world, Jerusalem, Israel. If you like this content, please hit the like button below. If you've not yet done so, please subscribe to both the YouTube channel and to the podcast. And if you think somebody might find this of interest, why don't you go ahead and hit the share button below as well. So, came across an interesting article from Meg Bartlett from Flow FP. And she's talking about why the title is Why a Traditional Investment Portfolio is Better Than Real Estate. Now, why does this come up? Because especially here in Israel, clients have an affinity for real estate. I would say that's my biggest competition is people taking their money to buy real estate. Not other financial professionals. Everybody does well, and everybody's got their own client base. But I think we all probably could say that real estate is the biggest competition. We like to own tangible things that we can feel more than sort of esoteric portfolio of stocks and bonds and ETFs and what have you. Just today, I was speaking to somebody who invested in real estate. And now they freed up some money, and they spoke to like an estate planner or something like that, and they recommended that they invest some of the money in the S&P 500 and then the rest of the money in a real estate deal. Okay, so that always makes me a little bit nervous, real estate deals, because if you don't know who it is that you're getting in with, and there have been so many scams and so many frauds with real estate deals that I would be very, very, very nervous about somebody who just hangs out a shingle and says we're raising money to buy, to buy some residential housing or student housing, whatever it is, right? I would go, if you're going to do it, with well-known firms that have been around for a very long time. As opposed to somebody new. I know people who've bought, the same apartment, people from Israel who bought the same apartment in Tennessee, I believe it was. Somebody here was marketing it, and two different people here bought the same apartment. They figured it out when they went there, and they realized that it was all a scam. Anyway, she says, if you want to invest in real estate because you want passive income, keep this in mind. There is no kind of investing that produces income more passively than a traditional investment portfolio. When I talk about a, quote, traditional investment portfolio, I mean owning individual stocks and bonds, or more likely funds, mutual funds, index funds, ETFs, of stocks and bonds and accounts like a 401k, IRA, and taxable brokerage accounts. The boring stuff. If you're looking for passive income, a traditional investment portfolio can create that easily. You just sell shares of the aforementioned stock, bonds, or funds with a few clicks of the button and take the cash. She says, okay, yes, investing is more nuanced than that, but apparently it has never occurred to most people that you can generate income from a traditional portfolio just by selling stuff. In fact, that's probably how most clients of most financial advisors get income when they retire. I take issue with that because a lot of people set up their portfolio for it to generate income so they don't have to touch the principal, but that's something else. She goes, I'm not a real estate guy. I know financial planners who are and who specialize in helping people build wealth through real estate investing. If you're interested in buying real estate, you likely don't need me to enumerate its virtues, but let me give you a bit of screen space before I start digging into potential negatives. Right. The issue is, I think, is that there are people, when she talks about passive income, it's true. People have the misnomer, I think, that owning real estate is easy. It's not easy, and it's certainly not easy at 1 o'clock in the morning when your tenant calls you and says that a pipe burst. It's not fun. Yes, there is potential upside, right? Certainly here in Israel, if you get in what's called a Pinui Binui situation or a Tama 38 situation, there's definitely upside. Globally, or certainly in America and in Israel, where you have a shortage of supply, until that's taken care of, there's a good chance, that there can be some capital appreciation in your real estate. Oftentimes, I take issue with her. The income that you're going to generate from the real estate is probably going to be higher than what you're going to get from your portfolio, especially if you just got a bunch of index funds. You're looking at between 1% and 2%, as opposed to real estate, which is going to be in the mid to high single digits, and just in terms of income generated. So I disagree, but it's work, right? It's not just you got to make sure the rent gets collected. You got to fix up the place that you're renting, right? There's money that you got to put into it. If it was really, really easy, everybody would do it, right? It's not that easy. It's a lot of work. And where she's correct is in an investment portfolio, there is definitely, when it's passive, right? You don't have to do anything. You buy your initial stock or fund or whatever, and that's it. It starts quarterly or semi-annually, whatever it is, starts monthly, starts shooting out that income. You don't have to do anything. It just comes into your account. So that is definitely easier, but where I take issue is not nearly as much as you're going to get from real estate, probably, number one. And number two, you don't have potentially the same amount of capital appreciation you have in real estate, but along with that, right, risk equals reward, right? There is risk involved. Real estate is not easy. You have to put in a lot of work. I know plenty of people who have gotten burned on real estate, lost a lot of money on real estate, not just for fraud, just because they bought the wrong properties and they didn't know how to analyze the properties. She says behavior is a huge component of investment success. If you want to be a successful investor in the long term, you want to be a long-term investor. The most reliable way to accomplish is to buy investments and just keep holding them. In this way, owning real estate directly can have an advantage over a traditional investment portfolio. You can see the value of your stock, bond, or ETF every day. When it goes up, glorious. You're floating on air, envisioning those first-class tickets you can now afford. When it goes down, gloom and doom, and everything is horrible. When you own, say, a single-family rental home, you know what its true value is on the day you buy it. That's what you paid for it, right? And the day you sell it, somebody else, that price that you agree to sell it at. The best you can own every other day is comps, which are just informed guesses and not a number you're confronting daily in the headlines, which is important, right? One of my jobs is to teach clients not to look at their portfolio. I was speaking with somebody recently, a client who called me up, who's owned the same ETFs for years, if not, I don't want to say decades because they didn't exist, but years. And he hasn't made a change in his portfolio in years. And he told me the other day that he looks 2 or 3 times a day at his portfolio. And I was like, huh? Why on earth would you do such a thing? All he's going to do is make you crazy. You don't ever make any changes anyway. So even look, you're not turning into a trader, right? Nothing is happening, right? The value goes up a little bit. It goes down a little bit. Why make yourself sick by looking at it? That's the beauty of real estate, right? You can't keep hitting refresh on your computer because nothing changes. Maybe you can look at Comp and Zillow, and if maybe there it's going to change. But in the real world, the value of your house does not, or your property doesn't change minute to minute like the value of your stocks or your ETFs change. So it's definitely, in terms of that, it's definitely an advantage, especially when things drop, right? Because it's not priced every single second, you don't have that same knowledge that, oh my God, I've just lost 20% of the value of my real estate because it doesn't change in price very much. So those are just a few of the issues. I could go on and on and on, but it's important to know that real estate, number one, is just fine. It's a good investment, but it's hard work. You have to analyze things. You have to take care of it if you have got rental properties. It's not simple. But on the other hand, it's generally going to pay you more in terms of income than you're going to get from your investment portfolio. On the other hand, your investment portfolio is pretty passive. You don't have to do very much other than buy the ETF or buy the stock and just start collecting the dividends. That's about it. So that's just a little bit into the differences between real estate and a regular investment portfolio. You've been tuning in to the Aaron Katzman Show. We speak about your life, your money, and your investments. If you like this content, please hit the like button below. If you've not yet done so, please subscribe to both the YouTube channel and to the podcast. And if you think somebody might find this of interest, why don't you go ahead and hit the share button and share it with them as well. Thanks so much for tuning in, and we'll speak to you soon.